Okay, it is the Wednesday session, the day before Thanksgiving. We're getting a rally, nearly 3% right now. It was over 3% at the highs on Bitcoin. And when I warned you last week that we were going to form a bottom and get a rebound, that is now happening. Again, I call for a short-term bottom and a bounce. That doesn't mean a major bottom. That doesn't mean the sell-off is over. That doesn't mean Bitcoin's now going to resume the advance and go to new highs. That's not what that means. It means a short-term bottom and a bounce. A bounce is a bounce. Sometimes they're bigger, sometimes they're smaller. But again, it's going to be followed by more selling and new lows. Sell-off is not over yet. Likely going to drop 40 to 50% lower. So far, we've only dropped 36%, 36% since I called the top at major resistance. And again, we were told this wasn't going to happen. We were told there's no possible way this is going to happen. Everybody was telling us that's why you saw the largest liquidation in history. Everybody believed that we were going to 200,000 to 250,000 by the end of the fourth quarter, by the end of December, by the end of the year. Everybody believed that. Nobody believed we would do the complete opposite. Except me and just a handful of people. That's why we saw the largest liquidation in history. And I told you we were going to get bigger liquidation moves than that. And we did. We've seen this drop sharply off of the counter trend rally back up to the 50 period moving average that we hit 116. And I told you again, that was the final exit point. Bitcoin has confirmed a bear market. It's confirmed it in the weekly time frame. Some signals have confirmed in the monthly time frame. And again, the MACD by the end of the month could confirm the bear market. And that's the Johnny come lately signal. Still have people that are in denial. So we're getting the bounce again. During the decline, you're going to have bounces along the way. We are in a downtrend. You have a series of lower highs and lower lows. In a downtrend until proven otherwise. I think the downtrend continues into January, and then you get the massive rally because that's where I think the Fed is going to panic and cut. The stock market is forming the head and shoulders as Bitcoin formed the head and shoulders. Back up here, Bitcoin formed the head and shoulders, and stock market's getting the right shoulder right now. Bitcoin likely move lower as the stock market plays catch up. Bitcoin will test the April low at 74,000, eventually take it out and get about a 50% drop. I've made this very, very clear. Now, every single video, again, I told you at the top, I call the top resistance because I believed that I saw evidence of a top. And I talked about a 40 or 50% drop. I've talked about this risk of now moving into a bear market, which I told you I believed is the case. But the bullish scenario, if I was wrong, we can clear resistance. I told you more than likely where we're getting a wave 1 and a 2 and moving into crash wave 3, or getting that other scenario of the leading diagonal, which I think has been pretty much canceled out. I think the crash wave 3 scenario is clearly in play, in my opinion. For both scenarios, the leading diagonal and the crash wave 3 scenario, both of them were bearish scenarios. Both of them takes you lower, takes Bitcoin lower. We're getting the bounce. If we get a bigger bounce, watch the 20 period moving average. I don't think you move above this level right here, this 98,000 area. I think you'll see a lower high somewhere below that, because I believe we're in the wave 4 of crash wave 3, and you're going to get the wave 5 probably down to lower levels, below 80,000, below this level, 274,000. But the Moonboys and the experts are telling us, oh no, the bottom's in, the bottom's in. Well, you got one big problem. The longer term charts, the weekly, the monthly, they're warning that Bitcoin has already topped and begun a bear market. I don't like that. That's just a bunch of fun. I don't care what you like. I had one guy tell me that I'm worth $600 million, so, this can't play out. I don't care how much money you have. I don't care if you don't like it. I don't care if you think it's a bunch of fun. You cannot stop a legitimate bear market from happening. In order to turn things back to bullish, you've got to turn the weekly and the monthly charts back to bullish. That's not happening. The chances we go make new highs are slim to none. But you got the people that are telling us, oh, this is the bottom. This is the bottom. And now they're moving their targets. You know, Tom Lee, his target of 200 to 250,000 by the end of the year was not going to play out. Told you he's going to do what he did the last time. The last top, targets didn't play out. He was going to move them forward into the future. That's what he's done. And that's what other people are doing. They're, oh, by January now, we're going to be at 200,000. That's what people are reporting about Tom Lee in his latest predictions, because his predictions here back in October, September, he was all bullish, perma bull, by the way, and he was telling us we were going to have this great fourth quarter, and the complete opposite happened. And now he's moving the target forward. I told you the chances of his target being reached in the fourth quarter weren't going to happen. Chances of my prediction that he was going to move his target forward was going to happen. When we get the bigger drop, he's going to go, oh, this is a great buying opportunity. And again, this is what he's done in the past. This is what he's done in 2021 and 2022. So I'm looking at what he's done in the past and saying, hey, this is likely what he's going to do in the future. My prediction about him moving his target forward came true. His prediction about Bitcoin 200,000 and 250,000 did not come true. Prediction of the crash and the top did come true. Then you have other Moonboys that are all now moving their targets forward. Again, this is the same stuff they did back at the 2021 top, the 2021 top and the 2022 crash and bear market. I understand what they're going to do before they do it. That's why I'm able to predict that they're going to move their targets forward, which they're now doing and have done. Okay. I want to wish everybody a wonderful Thanksgiving. We're getting the rally that I predicted, but I wanted to talk about the Elliott wave count because, again, I think this rally is going to fail. We're going to go to new lows. Watch the video all the way through. We're showing you my two Elliott wave counts, showing you where we might rally back up to based on the log scaling, the linear scaling. Just look at these things. So watch the video all the way through. Please support the channel with the link directly below. That allows me to be able to provide you this information. If you like my charts, if you like my indicators, if you like my Elliott wave counts, I don't know about you, but my indicators are really helping me continue to be right. If you find that information helpful, please. Thankful for that here at Thanksgiving. And if you're thankful for my indicators, as I am thankful for my indicators, please follow the link below and support the channel. It'll take you to a secured site. You can donate any amount you want or make it a recurring donation. You can take a moment. If you're thankful for my indicators, take a moment and support the channel. Let me know that you want me to make these videos, that you like this information. Just show you my indicators that I look at every day. I'm showing you in this video, I'm showing you my Elliott wave counts, trying to determine price direction. If you find that helpful, please support the channel today. Watch the video all the way through. If you want to be in the know, if you want to know what's going on, watch the video all the way through. If you want to be clueless, don't watch the video all the way through. Again, we're rallying up as I warned, but we're going to get a bigger sell-off. This is not the bottom here at 80,000. So Bitcoin up right around 3% right now, just slightly under 3%. It was up over 3% at the highs of the session. We'll see how it closes, but again, I expect this rally, and then I expect more selling to follow. I told you last week that we likely going to bottom, which I was correct. We ended up bottoming on Friday, but I did tell you I thought we'd bottom a little bit earlier in the week. I was wrong about that, but I was right about the bottom. I thought we'd get this rally back up for the Thanksgiving week, and then we'll see more selling. Depending on how long this rally goes, maybe it goes into next week, maybe it ends this week. We'll see how it goes. But again, it is nothing more than a counter trend. I remain short. I remain bearish. This right here, I have no interest in catching a falling knife. As I've said, again, I am a swing trader. I'll be looking to close my swing trade short positions at lower levels. I'm expecting a 40 to 50% drop. We've only had 36% of it. So again, I don't think it's done. We got that 9 count last week, and I told you that's one of the reasons why I was expecting a bounce, because we have price exhaustion to the downside. You're going to get a bounce, and then you're going to get a trend extension to the downside once this is done, and we'll move to complete the 13 count down at lower levels. This is a bounce. It's going to be followed by, whenever it's done, maybe higher levels, maybe not as high, but again, once it's done, wherever it finishes, you're going to get a trend extension to the downside. If you didn't watch my last video, I'll link it at the end of this video. Go watch it. I went through all my indicators and showed you the bottoming signals and showed you what the signals look like, and you end up getting the bigger rally into the 90,000 range. You could see a bigger rally. Right now we're at 89,000, the high 89,000 area at the moment I'm making the video here on Wednesday. We had reached 90,000 and some change at the highs. So again, if we move deeper into this 90,000 area, the low to mid levels, 90 to 95,000, to higher levels, 95,000 to 97 or 98,000, again, you could be coming up closer to this level right here for resuming the decline. We did reach at the intraday high so far 90,000 and some change, slightly above that level. Currently, we're at the moment in the high 89,000 area. Currently at 89,778 at the moment. At the highs of the session, we hit 90,400 and then retreated off that level. So again, we'll be watching to see if we get the bigger rebound or not. I think one of two things are happening. Again, either we're getting these minor waves in primary wave 3, the blue count down here, and you're still in this intermediate wave 3, and you're getting, you completed wave 3 here, minor wave 3, minor wave 4, you get minor wave 5, that completes intermediate wave 3, and then you bounce, and then again you get this intermediate wave 3, then intermediate wave 4, and then intermediate wave 5, and you complete the primary wave. That's one possibility. The other possibility is that we've completed intermediate wave 3 here, and we're now in intermediate wave 4. You'll get intermediate wave 5 down here at the 74,000 area or just beyond it, and then that completes the primary wave 3. You get primary wave 4, and then one more dump into January for primary wave 5. That's the other count. Let me show that to you. But here, again, I've marked this as primary wave 1, primary wave 2, intermediate wave 1 and 2 up here. And now we're getting these minor waves, and we're up to minor wave 3 and working on minor wave 4 for our intermediate wave 3, which eventually will give us intermediate wave 3, 4, and 5 for primary wave 5. I think the other count might have a little bit more merit. Both counts are still very much in place. I don't know if we're in minor wave 4 or if we're in intermediate wave 4. We've got the intermediate wave count. We can count this whole wave down as intermediate wave 1 and a 2, or it could be a 1, 2, 1, 2, like I have marked right here for this count. So again, Elliott wave is speculation. If you know the future, you're one up on me. Again, I do not trade Elliott wave. I use it to try to determine the trend direction, the main movement of the trend direction, at some of these shorter term price fluctuations. Eventually, I think you're going to bottom down here around 50%, 63,000 or maybe beyond it. We did at the last bear market to kick off the bear market. I think you're going to get an ABC back up, and again, we come down here, Fibonacci retracement, which I'll show you in a moment. It could take us into the back end of the 90s, where we're just under right now here, 89,000. Or if we rally up a little higher, back up to the levels we're currently at right now, or something bigger. We're likely going to move back to the 200 period, depending on if it starts dropping sharply or flattens out and then drops. You're likely going to move back up to that 200 period moving average whenever this sell-off is done, which I think it will be done in January. Late December or January, that's what I've been predicting since the top. This is the minor wave 4 count, and that we're still working on the intermediate wave 3. Let me show you the other count. Now, I think it's more likely, and again, doesn't mean the other count can't play out, but I think it's more likely that we have a wave 3, intermediate wave 3 done. We're working on an intermediate wave 4, and we'll get the push down here to the 74,000 area for intermediate wave 5 to complete primary wave 3. Then get a bounce for wave 4, primary wave 4, and then get one more dump down into January, where I think you get primary wave 5. then I think you're going to get a big rally back up, a Fibonacci retracement back up to the 200 period, depending on how it begins to slope sharply downward or flattens out and kind of goes sideways a little bit, drifting lower, but then not as steep of an angle of descent. A couple of different ways, but I think you're going to do exactly what you did back in the last bear market, and that is sell off around 50% and then rally up big time. And here's the 2021 top and the sell-off and the rebound. And again, you're probably going to see something very, very similar to this. What we've seen at other bear markets for Bitcoin. Here we dropped 52%. And then we bottomed out. We had a big rally back up, came back down. You got an ABC move. You ended up forming a bear flag going into the 200 period moving average. And then the bottom fell out of Bitcoin. Here we rallied up after dropping 52%. We rallied up almost 46%. We moved just above the 50% retracement here. You rallied back to the 200-day moving average. You rallied to just above the 50-week moving average, and you completed the counter trend of the bear flag, and then Bitcoin collapsed. The people that never saw the top, and told us we had a fake breakout at the top back up here. And I took it on the chin back then too, because again, we had those divergences in the weekly time frame, in the monthly time frame, and in the daily time frame. The top back then attacked, just like I'm getting attacked now. We had the liquidation happen, same exact thing. Again, history doesn't repeat itself, but it often rhymes. Where here they said, oh, Bitcoin's never going below 60,000 or 60,000 again after it reached the high, collapsed by 52% down to the low 30,000 range. We had Bitcoin reach 126, and you had a bunch of Moonboys. We're never dropping below 110,000 again. And here we collapse down to 80,000. Moonboys do the same thing over and over. Moonboys were a cryptocurrency. I would be a trillionaire because I know what they're going to say before they say it. I know what they're going to do before they do it. Nevertheless, I digress. You dropped 52%, you rallied up 46%. This is the log scaling. You rallied up to that 50% retracement. Maybe we do that. Maybe we go a little higher, but you're probably going to rally towards the 200, maybe even overthrow it once this sell-off is done, which I think it will be done in January. That's when I think the Fed will panic. We'll have the stock market play catch up to Bitcoin. Bitcoin's leading the charge lower. The Fed will panic, have an emergency meeting, start emergency jumbo rate cuts. The herd, especially the crypto herd, believes that's bullish. And so we'll get this massive rally back to the 200 period moving average, but it will only be a counter trend for the right shoulder. Here you formed the right shoulder with a slanted neckline. I think you're going to get something similar to that. You have the head and shoulders pattern, and yes, you can have lopsided pattern. People tell me, oh, no, it's not perfect. People are delusional. Again, you can have slanted necklines. Necklines can slope higher or lower. Right shoulders and left shoulders, they can be lopsided. One can be higher than the other. If I zoom out here for a second, you can see the massive head and shoulders pattern that I've talked about here with the red left shoulder, head formation, right shoulder. Maybe we don't go this high. Maybe we go lower, maybe a little higher. But again, this is what I think is likely happening. I think we're setting up the same head and shoulders like we did back in 2021 and early 2022, where we go lower and take out the support area and then rally back up. And again, in that case, we did not move to the highs of the left shoulder. You had a lopsided pattern. You're probably going to see something very similar to that here. This scenario right here is our linear scaling. We may not reach this amount, the 61.8, because the log scaling is a little bit different. And when you start getting these dramatic drops, often you'll follow that log scaling with the Fibonacci's a little bit better. And that's what I showed you, the 50% retracement on the 2021 to 2022 drop that kicked off the bear market. This scenario is the linear scaling, and again, 50% retracement, 94,991. So 95,000 rounding up. 61.8 Fibonacci, 102,000 and some change. The mid 102,000 area. Again, the high over here about 107, 108,000. Know that we make it back above 100,000. 100,000 may be gone. You back over here, the final exit point at 116,000. I think that's gone. But we'll likely get a rally here that will convince the Moonboys, convince the herd it's over. Here we go. And you're probably forming this massive head and shoulders pattern, much like what we saw at the 2021 to 2022 top there that developed. Now, again, I don't know that we make it to 100,000. You may, but let's look at, this is the linear scaling. So 94,000 is the 50% retracement. That's what we hit previously. This is a linear, though, and 102,500 rounding up, 95,000 or so rounding up for our 50% retracement. And again, depending on how the 200 slopes downward. If we look at the log scaling, and again, the log and the linear Fibonacci retracements are going to be a little bit different. So if we take the, again, I'm taking this from the mid 63,000 area. So the 63,500 area, assuming we get a 50% drop, which again, historically has been around the average. We've seen the last sell-off of the kickoff the bear market was 52%. We've seen it a bit less at 45%. We've seen it more above 60%. So I think the average right around the 50% area, just a little bit more. So we might even dip a little lower than this, but that's what Bitcoin's done in the past. Here is the log scaling, and if we are in intermediate wave 3, here I've marked it primary wave 1, primary wave 2, this whole thing primary, intermediate wave 1, intermediate wave 2, we're completed now intermediate wave 3, we're now in intermediate wave 4, we get one more push down for intermediate wave 5 to complete primary wave 3, then you get primary wave 4, primary wave 5 into January, and you get your bottom, and I'm marking that as wave A. Potential zigzag correction could unfold in different corrective forms, but that's what I'm marking it at least so far. I think you'll get an ABC back up, and maybe here, maybe it looks a little different here with the log scaling, and you get an A back up, and you get this potential inverse head and shoulders, and the Moonboys go, oh, it's an inverse. You know, remember them? The people that told us we had a breakout at the top, the people that keep telling us that every dip is the bottom, and the dip that keeps on dipping. Remember those guys that have been completely wrong through the guys that were telling us we're going to 200 to 250,000 by the end of the year? Remember those guys that we were going to increase Bitcoin's market cap by over $2 trillion by the end of the year, and we've lost nearly $1 trillion in market cap since I called the top. Remember those guys? If I make one tiny little mistake, like last week, for instance, I told you I was looking for a bottom. I thought it would be Tuesday or Wednesday, but we ended up getting it on Friday. It's right about the bottom. I'm right about the bounce. The guts to tell you what I think. If I make one tiny little mistake, brutally attacked, these guys can make mistake after mistake. Everything they've said is a mistake. Nobody ever calls them on this stuff. Back up at the highs, I was telling you they're going to tell us we had an inverse head and shoulders pattern. Remember that? An inverse head and shoulders. I told you they were going to be duped and we were going to still go to new lows. And again, know how they think, so I know what they're going to say before they say it. But eventually, I think that if you do get this primary wave 3, primary wave 4, primary wave 5, again, you could eventually start seeing a inverse head and shoulders, and they'll go, oh, it's an inverse head and shoulders. And then, again, you're probably going to get a Fibonacci retracement and complete a counter trend rally back to the 200 period moving average to complete the head and shoulders pattern. And then the bottom is going to drop out of Bitcoin as it did back in 2022. Bitcoin is topped. It's entered a bear market. Same people that have been telling us we have a bottom, you know, with the liquidation move and at all these other lows all the way down. And right now they're doing it again. They'll say it down here, and then eventually they'll say it in January. And when the Fed does jumbo cuts, they'll tell us how bullish that is. Selling off with the Fed cutting rates, by the way. They're cutting because we're going to be moving into recession. They're just in denial about that, but they are cutting. Rate cuts will be associated with the recession and a bear market, complete opposite to what we're being told will happen. So here with the log scaling, the Fibonacci 50% retracement is at 89,000. It's just under 90,000. So again, you could move into this 90. Remember, we moved above the 50% retracement above it. So you can move back up to the levels where we're at right now. We hit the high right now at 90,000 during our trading session today. We can move back to these levels, just above them in the 50% retracement. The 61.8 Fibonacci, 97,000, the high 90,000 area. These Fibonacci retracements, unless we get above the 61.8 Fibonacci going to the 78.6 at 109,000, you're likely to stall at the 50% or 61.8 fib, assuming that we get a low of 63,000. If we go lower, these Fibonacci's would be even at lower levels. So do keep that in mind. I'm just looking at a ballpark area of where we might rally back up towards, but you're probably going to rally towards the 200 as you've done in the past, or maybe overthrow it. And then we'll see, where do we bottom? Do we bottom at 63, or do we get a 52 or 53% drop like we've done in past bear markets? Is it a little bit less? Is it, this is a 41% drop? Is it maybe a 45% drop like we've had with the smallest amount of decline to kick off the bear market for Bitcoin? I wanted to do a review of the Elliott wave counts I'm looking at. Let me just bring this up close. If this count is correct, we are in intermediate wave 4, we should not exceed 98,934, which were the lows right here, just below we broke this 98,333 area of support. I don't think we go above this level. If this count is correct, and we've completed intermediate wave 3, we're now in intermediate wave 4. That'll be followed by intermediate wave 5 going into the 74,000 area. Mark that here, 63,000 area eventually down here for primary wave 5 and wave A, and then the corrective move back up. And again, this is our log scaling. Bitcoin's famous, let me just say this, Bitcoin's famous for setting up head and shoulders. Remember, it was a head and shoulders that I called the top here with, I told you we were getting that right shoulder with 116,000, broke it, back tested it, and we're seeing this drop. Again, Bitcoin's famous for setting up head and shoulder patterns. 2021, 2022 top was a head and shoulders. The 2022 bottom, there it is, was a inverse head and shoulders. You can see it set up here. Very common. No guarantee, but I think it's a possibility. Whether we can make it back up above 100,000, I think really depends on how deep of a sell-off we get, and really where the 200 period is coming in. What kind of downward sloping 200 period moving average do we see by the time we bottom out? What does it look like? Is it flattening out, or is it sharply declining? So again, if this flattens out a little bit more, you might get closer to that 100,000, that low 100,000 area. So we'll watch to see what the 200 period looks like going forward. Looking at the Fibonacci retracements, depending on where we bottom, which I think is coming in January. The retracement percentage with the linear scaling, let me change it to the log scaling. If we move up 46% as we did at the last bear market, then you're looking at moving again into the mid 90,000 area. That's what we did the last time. If we move up higher, if we move up to the 61.8 Fibonacci, that's nearly a 50, well, right around a 53%, just over 53% rally. If you get something bigger, then you're moving above 100,000. So again, keep in mind, Bitcoin gets these big, massive sell-offs and big rallies back up. So again, I'll be watching that, but back up to the 61.8 Fibonacci, it'd be a 53% rally off of the lows. Assuming we bottom out at the mid 63,000 area, we may go lower than that. We may be a little higher than that. It's just a ballpark estimate based on the past bear markets where we've kicked off the bear market with a crash move. I wish everybody a wonderful Thanksgiving. I wanted to do this Elliott wave update, show you where I think we're rallying back up to with potentially intermediate wave 4, minor wave 4, and where we're likely going. This is the count that I think is most likely in play. Working on intermediate wave 4, might be minor wave 4. That's why I'm showing you the other count, but this is the one I think is more likely. Have a great Thanksgiving. Have fun on Black Friday.